we are continuing to experience a lot of volatility in the market. One day the market is up, the next day it's down, then it's up. Someday we are winning, someday we are depressed, someday we lose soldiers on the field, a sad day for the United States of America. So and then we get all these images on our screens, on YouTube, on CNN, Fox, wherever you get your news from. And all of these things are really making us quite depressed. So I want to talk a little bit about the market right now. What are you experiencing? Where do I think the market is going, and what is going to happen in the near future? So I think you're going to find this video very helpful if you are paying attention to the market. Now, those of you guys who don't know me, my name is Deepak, and I run a firm called Tax Code Advisors. And if you want to reach out to me, just go to taxcodeadvisors.com. Now, what if I told you that right now, today, as you're listening to this, over $2 trillion at risk? Would that freak you out? You might not have seen that headline just yet. And why would $2 trillion be at risk? Well, not because stock market is crashing, not because companies are producing bad earnings, but it's because of a conflict between the United States and Iran, or Israel and Iran, whichever way you want to look at it. So this is a Middle East war, but it is bleeding some of the richest nations on earth, countries that are not even involved in the war. I'm talking about Saudi Arabia, the UAE, and Kuwait. And what they are considering doing next could shake the entire global economy, certainly can have a major impact on the United States. So stay with me, because this segment, I'm going to attempt to connect all of different kind of pieces together and see if we can make some sense out of it. Now, if you don't know that oil prices are increasing, then maybe you're living in a different world right now. You probably have seen at the gas pumps that oil prices are creeping up every single day. I think this week they're probably around to $3.20. Luckily, in the Texas area, in Austin area, they're still significantly cheaper than $3. But I'm just talking about the national average. But the national average was almost $2.89 just a month ago. So from $2.89, now the average is up $3.20. And if you are one of those lucky ones who live in the great state of California, you're probably paying maybe, I don't know, $4.50, $5.50, somewhere around that, something in between. So question we got to ask is why oil prices are rising, and what does that have to do with US and Iran, and what does that have to do with Gulf countries? So we're going to try to talk through that. You probably have heard Strait of Hormuz issue, right? A narrow stretch of water in the Persian Gulf. This is where roughly 20% of the world oil passes through every single day. And right now, that is a danger zone, or maybe we should call it a war zone. At least 5 oil tankers have been struck or damaged in that region recently. So major insurance companies have canceled the risk coverage for ships traveling through that area. So can you still get insurance? Yeah, there are some options out there, but those options are 12 times higher than what people were paying just a month before. So without insurance, obviously ships do not want to go through that area. And that means, your oil tankers, your regular shipments, all stop. 20% of traffic every single day, completely standing still. Now, here's the thing. Market is full of people who have been investing for many, many years. So maybe some of you guys are new investing, you're still learning, but there are a lot of people who have been investing for 30, 40, 50 years. And these people have memories. They have memories from 1973, 1979, 1990, 2008. You're like, what did that have to do with the situation right now? Well, in 2008, oil prices hit $7 a barrel. Today, they're approaching almost $80. So if they continue to do that, market knows what comes next. And it's not like it takes a long time to get there. Like, for example, if the strait is not open, or we don't really figure out to keep the oil prices low enough for, let's say, another 30 days, oil prices will rise super fast. The problem is every time oil prices have risen so fast, so quickly, and to that level in the past, recession comes next. So all these professional investors know that. So right now, We all are watching these oil prices rise every single day. And that's where you see a lot of pain, a lot of frustration in the stock market right now. Now, the Financial Times is reporting that 3 of the 4 major Gulf states, Saudi Arabia, UAE, and Kuwait, are having serious conversations about something that would have been unthinkable just a couple months ago, pulling back their investments from the United States. Now, why would they do that? Well, first of all, we need to ask, why were they investing in the United States to begin with? Well, they were investing in the US because they were promised that we are entering into an era where there are going to be a lot of productivity gains. There will be a lot of investments, a lot of growth. United States GDP will grow like never before. A beautiful rosy picture. And when you hear that rosy picture, somebody comes and tells you about a great investment, you get super excited and you say, oh, I will go invest. And then the very same country, or very same person who got you all excited about this investment basically comes and kills your business. He, creates an environment where you have no customers. So if you don't have any customers, you don't have any income, what do? Are you going to be able to invest? Of course not. Now, Iran knows this. Iran knows that they cannot militarily win against the United States of America. So they want to create maximum pain. And the way to create that pain is by creating an environment where the neighbors are fearful of Iran. So what do I mean by that? Well, United States doesn't live next to Iran. Neither does Israel. So Israel and United States one day, whether that's 1 week from now or 1 month from now, will leave that area and go back home. But UAE is still in the neighborhood. Kuwait is still there. Qatar is still there. Saudi Arabia is still there. These countries still have to live there. So now they're thinking, if President Trump at some point decides, okay, I want to pull out and I'm done, I achieve my goal and I'm done with it, I'm leaving. But now what happens to us? We are left to deal with Iran for many, many years. What will happen with us? I mean, who do you think going to help Iran rebuild? Is it going to be the United States or is it going to be Russia and China? So if it's Russia and China, that means those 2 countries is going to have even more influence on Iran. So it's extremely important for the US that they achieve a long-term peace in the region, because if they leave this, half-baked, that can have major consequences for many, many years. So pulling back of investments by these countries is actually quite reasonable. So if they're fearful, they're worried, they don't see how United States will be able to win this war. So I'm sure they won't be able to invest that $2 trillion that President Trump has promised that is actually coming to the US. So that's issue number 1. And like I said, from their perspective, can you really blame them? I mean, where does their income come from? Their income comes from energy, from shipping, from tourism. And do you think energy is flowing from that region right now? Of course not. What about shipping? Well, like I said, there is no insurance, so shipping is dead. And then about tourism. Are you willing to travel? In matter of fact, take a look at all the airline disruptions. If anybody was thinking about traveling to any of those regions, it's completely gone. So it's not just that damage is being done only to Iran, but there's a lot of damage being done to the entire region. And that is exactly what Iran wants. Iran wants to put maximum pressure on the United States by creating that kind of disruption. Why? Because that is when oil prices continues to go up and all of these countries start to put pressure on the President Trump that, hey, you need to stop this because, maybe you can absorb the cost, but we certainly can't. Energy revenues are disrupted because of supply chain. Strait of Hormuz is completely closed. Shipping is slowing because nobody wants to send tankers through a war zone. And the tourism, of course, nobody wants to go in the region at all. So these countries are actually bleeding money right now. Now, these countries aren't saying they're angry at America. they are framing this as a precautionary measure because they cannot really come out and say United States is hurting us or make a very bold statement. But the fact that they're using this word precautionary measure is a signal that they want to put pressure on President Trump. That's careful diplomatic language. It means we're not making threats, we're just protecting ourselves. Please try to understand where we are coming from. But let's be honest about what this actually means. If Saudi Arabia, UAE, Kuwait start moving trillions of dollars out of US assets, US stocks, US Treasury bond, US real estate, everything comes under pressure. And that is a lot of pressure. And Financial Times report makes it clear these moves would be seen as a way to pressure President Trump into taking the situation more seriously. And I think he is, right? Trump has already said that US Navy could escort oil tankers through the strait. The US government is also considering offering political risk insurance through the Development Finance Corporation to get shipping companies back in the water. But here's the reality check. Could is doing a lot of work in that sentence. Nothing is guaranteed. Naval escorts could put US warships at risk. So the question is, what happens if we get a news that a US, aircraft carrier or a warship got sunk? Now you might say that's impossible, but in war, nothing is impossible. You never know. I'm just saying, hypothetically speaking, what happens then? Then oil prices will shoot like crazy because nobody is going to trust the security that the United States is providing. So that is a real problem. And second of all, you have the insurance, and let's say you do have the escort, somebody is escorting you out there, but who wants to take a risk? Because anybody who kind of goes through there right now is taking a risk on their life because you never know. It's not like there's an agreement or set of rules that this can be done or this can't be done. So anybody going through that is taking a lot of risk. So where do you find people who can operate those tankers in such environment? So that is another issue. So at the end of the day, they have leverage, $2 trillion worth of leverage, and they know it. Now, just when you thought this couldn't get more complicated, let's add Russia to the mix. There are growing concerns that Putin could cut off Russian oil supply as well. Russia is already under sanctions, but it has been quietly selling oil to countries like China and India. We already know that. If that supply gets disrupted, or if Russia uses energy as a geopolitical weapon, the way he has been doing before in Europe, we are looking at a global oil shock, two fronts simultaneously. So think about what that means. Gulf supply disrupted because of Iran conflict, Russian supply potentially cut off, two of the world's biggest oil producers pulling back at the same time. That is not just price spike. That's the kind of scenario that has historically preceded recessions. And we just walked through that history, right? I talked about 2008, 1990, stuff like that can happen again. Now, oil needs to spike 50% or more and stay there for several months to significantly raise recession risk. It's not just about price being high, it's about three things happening together: speed, magnitude, and duration. How fast the price rise, how big the increase is, and how long prices stay elevated. Markets can actually handle oil gradually rising, even to $100 a barrel. In matter of fact, I was bullish on oil prices since December. If it happens slowly, we're good. I would love to ride it out. What breaks the economy is when prices explode upward super fast, like a hockey stick, and don't come back down. Right now, oil has already climbed almost, 30-40% in last few weeks. I think it was trading almost $57, $58, I think just last month or so. And now it's approaching almost $80 a barrel. So the danger threshold to watch, I would say, is maybe around $90 or $100. That's roughly 50% spike from here. So if you're not invested in oil and you think something like this can happen, then here's your clue. Maybe this is a trade you want to take. If we hit $90 and stay there for a few months, recession risk goes up dramatically. If price stabilizes or come back down quickly, the economy can likely absorb the shock and we move on. So I think anything over $90 will start to trigger that kind of panic in the market. And, when oil prices spike, it hits your life from every direction all at once. For example, if you don't have electric car, you go to a gas pump, you feel it. If you're at grocery store, everything you buy gets trucked in, shipped, or flown in. Higher diesel cost means higher food prices. Farmers use diesel. Construction companies use diesel. Delivery drivers use diesel. It all flows downhill to you, so you end up paying for it. On your next flight, if you haven't really booked the flight, maybe many of you guys are thinking about taking your summer vacation, or maybe you're thinking about going to India or other places in the world during summer. Well, guess what? Jet fuel is one of the biggest costs for airlines. When it goes up, ticket prices obviously goes up as well. And here's one of the most people, here's one thing that most people don't think about. Oil is in almost everything you use. Your shampoo, your moisturizer, your lipstick, deodorant, clothing, nylon, spandex. I mean, you might not realize it, but it's used almost in our daily life, just like we use water. So oil is not just fuel, it's the raw material for massive portion of modern life. So when oil gets expensive, everything gets more expensive. And midterm is coming. And you remember President Trump has talked a lot about keeping oil prices low. So when everything gets more expensive, people pull back on spending. They still pay for gas and groceries, obviously, because they have no choice, but they skip the vacation. They delay buying a new car. They cut back on eating out. So consumer spending drives about 70% of the entire US economy. When consumers slow down, even a little, the whole economy feels it. Businesses see lower sales, they slow hiring, some start laying people off, profits drop, the stock market gets nervous. And I'm not even talking about AI yet. You guys know all kinds of disruption that is already happening with AI. Normally, when the economy starts slowing down, the Federal Reserve cut interest rates to stimulate growth. Lower rates means cheaper mortgages, cheaper business loans, more spending, more hiring. But if oil prices are pushing inflation back up, Fed has a problem. They can't cut rates when inflation is rising. If they do, they risk letting inflation run hot again, which is the same battle that we have been fighting for last few years now. So they might be forced to keep the rates elevated even as the economy slows. That is called stagflation, high inflation and slow growth at the same time. It is one of the hardest economic environment to fix. We haven't seen it badly since the 70s oil shocks. And on the government side, if a recession does hit, tax revenue falls while spending on things like unemployment goes up. And then don't forget, President Trump still has to pay the refund for tariffs that he has collected. He might have to pay interest fees. He might have to pay the attorney fees on that. The new tariffs he has implemented, they most likely are going to get challenged as well. And then on top of all that, we have this war that we are fighting, and that is costing us a lot of money. That means even larger federal deficit at a time when U.S. national debt is already approaching $39 trillion. The Fed, the White House, and Congress would all be dealing with bad options at the same time. So let's zoom all the way out and put all of this together. We have a war in the Middle East disrupting one of the world's most crucial oil routes. Three of the wealthiest nations in Gulf, Saudi Arabia, UAE, and Kuwait are reportedly considering pulling over $2 trillion out of U.S. investment because their own budgets are being strained by falling energy, shipping, and tourism revenue. I mean, we have basically literally killed all their earning options. They are calling it precautionary measure, but make no mistake, it would be a direct financial pressure on, well, I wouldn't say, it will be certainly a direct financial pressure on these countries. That pressure will turn into political pressure on President Trump. Meanwhile, Putin could cut off Russian oil supply, adding a second major shock to the global energy markets at the same time. we're already seeing that, oil prices are climbing. Although I did see that uh, the US administration is now allowing Russia to sell a lot of oil to India to keep the prices a little bit under control. So we did saw that prices kind of dip a little bit. Are they going to have a meaningful impact? Would they come down to below $70? Let's wait and watch. So this is not a foreign policy story happening far away. So don't think that, hey, I'm not in Middle East, I'm not in Israel, so this has nothing to do with me. This is your money story, your job story, your daily life story. The war in the Middle East, the Gulf nation investment decisions, Putin's energy moves, they all are connected to the price of gas in your driveway, the cost of groceries in your cart, and whether your company is hiring or freezing headcounts 6 months from now. So watch out for that oil spike in the oil prices. Watch whether Saudi Arabia, UAE, and Kuwait actually start moving money. Watch what Russia does with its supply, and watch whether the US government respond by implementing what President Trump has promised, which is to have Navy escorts, offering risk insurance, and find other ways to provide enough oil supply to the world. One thing is about actual math, and the other thing is perception. President Trump and his administration need to create perception that they will do everything in their power to keep the oil prices below certain number. Problem is they're offering all this, but they haven't promised something. I think, for example, if the US government comes out with a policy that, if the oil prices are this level, we will provide the oil some other way, or something along those lines. They need to come up with some assurance to the world to keep them feel comfortable. Because right now, all of those questions are still unanswered. And the answers, when they come, are going to matter to markets, to policy, to every single person listening to this. So I would say be careful. If oil prices come down, most likely they will come down just as fast as they went up, because it really all depends upon what kind of policy President Trump makes. So do I want to take a lot of money and invest in oil right now? No. I want to be very, very cautious because it can go either way. So that's what I'm thinking about the market. But again, it doesn't really matter to me anyways, because the whole idea is that this war cannot go on forever, and everything that gets starts will eventually end. And then we move on to what matters most, which is fundamentals and earnings. So this is what I'm seeing in the market. So if you guys want to learn more, then I will give you some options. You can certainly connect with me on WhatsApp. I have a nice little group that you can join. You can come meet with me at a meetup. So I do a lot of in-person meetups. Or you can book a discovery call on Zoom. Just go to taxcodeadvisors.com and book a time with me, and then we can have a quick talk. But I hope you find this helpful. If you do, then great. I'm glad that I was able to add 2 cents and help you out in some way. But, I'll see you